So we've got Shawn Simme with Benefit Concepts, and he, I asked him today, I thought maybe some, self-employed realtors would have questions about health insurance. So I just wanted to kind of leave it up to you to ask questions, just based on anything that might be specific to you or what you would want to hear about.
And if it's easier, Danielle, you can just do the chat and I can read it.
I don't really have a question about health insurance because I'm on my husband's health insurance.
Good.
I have some health insurance questions actually.
Yeah, let's do it. Let's hear them.
So what do you do whenever, can one person get health insurance like in Mark's case or not? They have to be on group health insurance.
So the difference between kind of options out there, it's really if you are an individual versus through an employer, is that if you're an individual, you can really only get an HMO plan through the healthcare marketplace. And there are some PPO plans for individuals available, but they're what they call short-term plans, and they don't cover any sort of pre-existing conditions. And they kind of run for a 6-month period of time. And if something happens during that period of time, 6 months later, you basically are left with, okay, now I have a plan that won't cover whatever condition I did actually just develop.
Interesting.
But somebody in his situation, the key thing is you need to be a business. And so if you're a business and you have, like I have it over and over again, where you might have a husband and wife who start a business, and as long as somebody's on the payroll as a W-2 employee and the other one's the owner, as long as you're two people to qualify as a group first, then you could get a group insurance plan, which gives you access to a PPO plan as a group. And then in a group PPO plan will cover all pre-existing conditions, and the rates aren't based on your health conditions. Since the Affordable Care Act happened, for small businesses, for particular plans, there's basically plans that don't ask any questions. It's just based on how old are you. And as long as you qualify as a group, then you can go out there and get one of those plans.
So it would have to be a group of 2 people. It can't be a group of 1.
Correct. And so you have to qualify, and it's just the dynamics of how they consider things. So you have to qualify as a group first. So let's just say you and your husband had a business. And so you could say, okay, we have this business and we're both employees of it. And so you qualify as a group. But then if you said, you know what, I don't need to enroll for coverage because I've got coverage through Jennifer.
Right.
But he wants to enroll, that you can enroll and you can have a group insurance plan with only one person enrolled on it, but you have to qualify as a group first. So you have to be 2 or more to begin with, but only one person has to enroll.
Interesting. Because I'm trying to figure out, Mark got Medicare for the first 2 years of his transplant, and then I've got to have to put him on my legacy policy, and that sucker is like $1,100 a month. Right, Jen, isn't that what the husband?
With a family, yeah, if you have the kids already, when you add the spouse, it jumps up. I think I pay with whatever plan I got, I'm like $1,500 maybe, between $1,200 and $1,500. But I don't know if there's options based on what you choose, like what deductible or.
Yeah, it definitely can range significantly. I mean, if you go with a higher deductible plan, like kind of the maximum out there, like something in the neighborhood of a $6,000 to $7,000 deductible.
That's what we have right now.
Then you could probably get that rate into the, $500 to $600 a month range for a PPO plan. It's just, but then it's always that if he's going to use it, is looking at the richer plans, you're like, okay, well, if we pay an extra $100 a month, but cut that deductible down to $3,000, is it worth doing that?
Yeah, we'll have to come up with a master plan, because I don't know if maybe I have to be on his business, and I mean, I can be just the worst employee of the year and make, $3,000 a year, so that we have 2 people, you know what I'm saying?
Well, yeah, exactly. Because and the other part to consider is knowing your family is, even if I see people do it all the time where one of their kids is, so if you have a business and even if you make one of your kids a part-time employee, and so they won't even be eligible for your plan, but you're now a group, you're the business owner, and there's documentation to prove that, but then you now have a payroll even with your part-time employee, and that person's not eligible. As you as the owner are the only person enrolling because you're the one that's qualified as the person who's eligible for the plan, but you already qualified as a group, a business of more than one person prior to that. So you could
Okay,
always,
we're gonna have to figure that out because the thought of spending another $700 a month out of my paycheck doesn't sit well.
So quick question. So let's say, for example, I decide to have one employee and my assistant, for example. Am I still considered as a group because I have one person?
you are, yeah, because you're the owner, and if your assistant is a W-2 employee of yours, that you could start a group insurance plan for just her. You could still be covered underneath your husband, and you could do a group insurance plan for her.
So I'm wondering now, the question about pricing is going to be more, is it the more employee you have, the more expensive, of course, it's going to be, or how, for the employee, or how does that, I don't know how this works. Is that
the number
the employee pay on his own, or I have to pay for it, or how does that work?
it's up to you. So as to offer an insurance plan, you don't have to contribute towards it as the employer. Now you certainly can, but the rates are all just based off of age or how old is that employee. And so if she's younger, then the rate's going to be lesser. If they're older, then the rate can be higher. But then there's also a whole range on the benefit spectrum, as far as very low deductibles is something significant and you got hospitalized happen, or higher deductibles that are available. And so that's kind of what we do for companies is when they want to look at plans is we kind of show them the range on that to see, okay, here the two extremes, here's the most expensive it could be, and here's the least expensive it could be for what's out there, and then helping companies kind of figure out, okay, because really what we find more often than not is most people tend to, you hear the term overinsured, but it's really what is the likelihood based on my current situation that I'm going to have a significant amount of medical expenses. It's really pretty rare that statistically, I mean, you might have somebody like Michelle with her husband who meets his deductible probably every year and has a lot of expenses. But the average person, if you have a deductible on your health insurance of over $2,500, you only need it once every 10 to 12 years. And so a lot of times you're better off going with the lower cost plan, just knowing you've got something there to protect you in case something catastrophic happens, and saving that money in your own pocket. Now, if you have a condition like Michelle's husband to where you know you're going to need it, then it's worth paying the extra money to have a richer plan to keep your out-of-pocket expenses down when you use it. But yeah, Danielle, and my contact information is on that top right-hand corner, but if you, all I would need is the name of your business and your employee's date of birth and their home zip code, and we can put a proposal together.
Hey, I have a question, Shawn. So I think I know the answer, but maybe, Danielle has a lot of clients that are actually, some of them are from other countries, so she might benefit from this as well. But my in-laws are residents, okay? So they are here. They've never worked in the system, so they are not eligible for Medicaid or Medicare. They're not eligible for Medicaid either because they're not citizens. I mean, my biggest fear is that something will happen to them. They're on the county insurance. My brother-in-law claims them as living with them. So they are on the Harris County, whatever that gold card. But like on the gold card, like let's say something catastrophic happened to them. I mean, the gold card is just going to get them in and out of the hospital as much as possible and kick them to whatever long-term care or home care, right? I mean, if something happened. But would it treat them? They'd have to go to a county hospital, but they'd be treated for emergency. I mean, if they needed some kind of surgery, they'd do it, right?
Yes. Yeah. That's what the gold card program, and that through the Harris County Hospital District. So yeah, they would have to go to Ben Taub or LBJ, one of the Harris County Hospital District hospitals, but then, it would cover those things for them. And then they basically end up trying to work out some sort of, they still, even though those plans get you in, they still try to charge you money. So they start requesting information, they try to in a nice way, try to set up some sort of payment plan with people.
Sure. And then what if they got cancer? Like they wouldn't do cancer treatment, would they? Does that through
They,
stuff?
they do, and it's where and it's part of where, like, if for people who are even here, if they don't have statuses, they're still eligible for plans through the healthcare marketplace. And so just because they don't have status here is even people, I mean, just because we see it all the time, is people who are here illegally, you can still go out there and purchase health insurance through the healthcare marketplace.
Oh.
So there is not a, that there's access to coverage. You just have to, like, coverage through the healthcare marketplace. If you're currently not covered, just the only time you can get that plan is the start of that January the 1st. And so even if you're over age 65, you're going to be limited in what your options are, but you could still go get coverage.
I mean, approximately like in a large range. I mean, probably someone who's 72, she's got really no existing conditions, but someone who's a healthy 72-year-old with no big ailments. I mean, is it like $500 a month, $1,500 a month? Like,
I mean, $1,500 a month would be for a richer plan, but you'd probably be looking at something in the $500 to $700 a month range just for kind of the most basic plan.
mm-hmm.
Where it's just going to be kind of you've got to ballpark it, just $7,000 deductible,
Sure.
And then everything is picked up after that if you actually have enough to meet that.
Okay. Awesome. No, that helps me a lot. I think, Michelle, we had someone else join on. Diane, is it, she was on.
She keeps going on back and forth.
Is it Diane DeGuerin?
It doesn't say her last name, but the way her name is spelled, it looks like how she spells it, the way, because she's got 2 N's in it.
Yeah, I think it's her. Is there anything, any kind of nuggets, Shawn? Like, I have a lot of self-employed clients. We never really talk about insurance, but like, other than health insurance, is there anything that self-employed people need to know or think about, or even not self-employed, right? Like, I'm not self-employed, but I know, like, Danielle, she's self-employed realtor. So any other kind of stuff that you do?
I mean, just seeing her there with a couple of kids and just knowing y'all as well. I mean, stuff that, that in my industry and as an employee benefits consultant, I've been talking to people about for years, that really people kind of like, yeah, I heard this term, didn't really know what it was, because we all for so long have been so accustomed to going and seeing our doctor face to face. And so people have not really over the last, probably 10 years that this has been an evolution of what's called telemedicine. And so telemedicine, and there are lots of services out there. So it's not just as simple as having a call with your doctor, but there's these services and they're built into every health insurance plan you've got out there. Like Danielle's got one through her husband, and you've got one through your company, and Michelle's got one as well. Is all of your health insurance plans have these telemedicine programs built into it, where basically you can call and have your doctor appointment over the telephone, or you can do kind of a Zoom meeting like this or Skype. And those services, one, they charge less than your normal doctor's office visit. So versus having to go to your doctor, but they're extremely convenient. And especially now in this era of coronavirus, where doctors really don't want you coming to their offices right now. And so people, where you hear some of this stuff in the news about people not getting other routine care done, whereas these telemedicine services, that's what they're there for. And where I myself have not been to my regular doctor for over 10 years for anything other than physicals. And so and I'm not one of those people who never gets, when I feel sick, that I don't ever get taken care of, but I use that telemedicine service that's built into my health insurance plan. And where I'd recommend them to people is they're so much more convenient than a doctor's appointment, that a lot of us, when we feel sick, we usually wait for a while, because we know if we call our doctor, we're going to have to schedule an appointment based on their convenience, not ours. And then we're going to have to go see them, and then wait in that waiting room with other sick people. Whereas you use that telemedicine service, you call that 800 number for that service that you have, and that's built into your plan. And what's going to happen is they're going to give you two options when you call them. They're going to say, do you want to schedule a time for a doctor to call you back, or do you want somebody to call you immediately? I always do the immediate, and until coronavirus happened, when these wait times went up a little bit, where it might take a couple hours for somebody to call you back, they almost always called back on that immediate option in less than 5 minutes. Whereas when you're sick and you don't feel good, and I mean, we all live it. If I assume everybody on here lives in the Houston area, we all go through this allergy season right now, and even more than ever, where everybody's sensitive about, well, is it allergies or do I have coronavirus now?
Yeah, don't sneeze.
Exactly. And so, but to use that telemedicine option that's built into your health insurance plan, to where and it's just so convenient that you basically can have that doctor's appointment in a matter of minutes from when you decide, okay, I'm going to finally break down and decide to do something about the way I feel right now and try to feel better. And what's the other part that's great about those things is when you call into that service, they're going to say, okay, if the doctor does want to call out a prescription for you, what pharmacy do you want it to go to? So all that stuff is already coordinated ahead of time. So when you talk to that doctor, they're like, yeah, it sounds like you've probably got an upper respiratory infection or a sinus infection. We want to call you out on an antibiotic and something else. Is all that stuff just happens like a snap for you, and you don't have, and basically all you just had your doctor's appointment over the phone or maybe on a Skype call, and then you went and picked up your prescription. I can't tell you how many times, like for me being in sales and driving all over the place, or for like y'all being realtors, is if you're out seeing people and you don't feel good, but you still, a lot of times you're like, well, I don't have time to go to the doctor. I don't have time out of my schedule to go do it. Is use that telemedicine option that's built into your health insurance plan. And you could do it. I mean, I can't tell you how many times I've had doctor's appointments sitting in Houston traffic and using that telemedicine option. And then I usually would tell them either the pharmacy that was by my office or the one by my home, and got that prescription and got feeling better, and never really took any time out of the rest of my day to do it. I did it while I was already, sitting in Houston traffic.
That's really cool. I didn't know. So basically, like when I go up for renewal in November, I should ask if there's kind of a telemedicine option.
Well, you don't have to wait till renewal. It's already, I bet it, depending on who your insurance company is, I could tell you who your telemedicine is.
I think it's usually included in there, no?
It is. It's built into the plans.
I just didn't even know. I mean, do you charge it's just like, what's the benefit of?
I'm sorry, you're breaking up a little bit, Jennifer. What was that?
I said, is it just a lower like copay, or there's no copay, or like what's the benefit?
So the copay, the charge that you'll have, that varies by your insurance company. Sometimes it's a $0 charge. Some of them might have a $30 charge, or if you had a plan that was a health savings account eligible plan where you don't have a copay, some of those services might be about $50 for that doctor's visit. That's the highest cost that I see. But then depending on the insurance company you have, really kind of dictates that cost. Like the service that we have in our company, and so is a service that's called Healthiest You. And Healthiest You is kind of a subdivision of this company that's called Teladoc. And Teladoc's the largest telemedicine provider out there. When we call in and use Healthiest You, for us, we pay $0. And so for us and for our employees, it's so important that we were like, hey, we don't want our employees to not go for a doctor's appointment when they don't feel well, and have the cost of going for a doctor's appointment to be the reason why they didn't do it.
Got it. Interesting.
But like if you like, I mentioned that Blue Cross Blue Shield being the largest health insurance company in Texas, is so most people are statistically going to have Blue Cross Blue Shield. And so like Blue Cross Blue Shield uses a service that's called MD Live. And so then depending on, you use that MD Live service that right now with all the coronavirus stuff going on, MD Live has waived the normal copay. And so their copay on their plan would be similar to you if your plan that you have right now with Blue Cross maybe had a $30 doctor office copay, that's what they usually would charge you in the past, whereas right now they're not charging that.
Got it. Okay. Cool. That's good to know.
Are you seeing any major changes like on the health insurance or them covering anything with COVID? Like has there been any major breakthrough change, like don't go to the doctor or whatever?
So that they will, anything that you want, if you are concerned at all that you've been exposed to it and you want to go in and get tested to find out, are you currently going to test positive for the coronavirus, that if you have health insurance, I'm not aware of a single health insurance, and I deal with all the major health insurance companies, whether it's Aetna, Blue Cross Blue Shield, Cigna, Humana, United Healthcare, that all those insurance companies, any coronavirus testing is going to be covered 100% for you. And even those, like some people are like, well, hey, that little drive-through place I went through doesn't take insurance. If you go to one of those places and pay for it, all you have to do is submit your receipt to your insurance company and they'll reimburse you for it.
Oh, wow.
So and then if you get determined to be coronavirus positive, any treatment that you go through will be covered 100% by all those same insurance companies. So if you don't have to pay for your deductible, co-pays, things like that. Or even prescription expenses, you don't have to pay for those if they're related to coronavirus. But I'll give you the flip side right now, is because the other part is people trying to find out, well, hey, I hear all this stuff about maybe I was already exposed to it and now I have the antibody, so I'm not going to get it. And I want to go find out, go to Quest Diagnostic, for example, and pay and go out there and get that test done. Well, Quest charges $130 to go in there and have that antibody test done. That is not covered. So to go find out, have I already had coronavirus? That's not covered. You can go in and find out, okay, am I currently going to test positive for it? And really anybody could say that and go to one of those facilities and find out, and that's going to be covered by your insurance plan.
Interesting. Okay.
Vaccine, have you heard anything on the street about a vaccine?
The stuff that we've heard from Methodist is, and Methodist is, so one of the people who's on Methodist board and our own company CEO are very good friends. And one of the things that we've heard is that the possible, oh good grief, I just went blank on the term, the immunization. Sorry, I was my brain went blank on the term. So that the immunization that they thought they had basically was more harmful than having coronavirus.
Oh, geez.
So
okay. Wow.
So that wasn't good. So that for right now, the safest thing is to treat the symptoms that they're still trying to figure out an immunization for it, if there's going to be one. I mean, that you hear some of this stuff saying it's going to take like a year and a half in the news, but the stuff they're saying it's probably going to take more like 5 years.
Wow.
Yeah. So the reality is they're just going to, we can't stay on lockdown permanently. They just got to figure out the most effective way to treat it if you do have it.
So do you think if people get coronavirus and let's say they change employers and they have to get a new plan and all that, is that going to hurt them in any way? Is that going to be like a pre-existing condition or anything like that?
Yeah, if somebody's had coronavirus previously, I would think that would, unfortunately, the way that some of the information that we're hearing out there is that's more of a positive than a negative. If you've already had it and recovered from it, like I was mentioning to y'all how my mom had it and has now recovered from it, and so she now has the antibodies from it, and they are, they seem to be pretty certain that once you've had it, at least at this point, they believe that that the immunity is permanent. They kind of, you hear some of this stuff that they don't know, but from what the doctors are telling her is they're pretty sure that it's going to be a lifetime immunity based on the stuff that they're seeing in her blood work. But it's where once somebody's had it, like for her, we didn't see her the whole time she had it when she got back from the cruise. And on Mother's Day was the first time we could go see her. And so we went there in person because in the last week, they basically retested her for coronavirus, and the test results were negative. Because that's one of the other parts. People are like, well, if I've had it, am I going to keep testing positive for it? So she was absolutely tested positive before, but now tested negative. But then they did the antibody test and they can see that she's got the antibodies for it.
Oh, that's awesome. And so now, okay, so that's what they're starting to find out. Okay, cool.
Yeah, it seems unfortunately, as I start seeing the stuff that they put out yesterday about the school plans for next year is, they kind of look like they're building in built-in peak sickness times into the flexibility of the school schedules. Just thinking, okay, if we basically have to shut down our school, maybe if we just see a big outbreak of just and I don't think they're as concerned about the, deadliness of it as much as, hey, we might just end up with a whole school of kids who are all running high fevers for a period of time. So we just got to, there's no point having school when 80% of our kids are gone.
Oh man, I don't want to think about that yet.
How's
I mean-
homeschooling going, Jen?
Well, I mean, I'm lucky that Fernando can homeschool. Do you know what I mean? But I mean, we're unique. Not every family can do that, have kids at home. It just puts stress on the rest of society,
Yeah, I mean, that's like that what we've seen just with our having about 150 employees with our own employees. I mean, the majority of our employees, I mean, seeing all women on here is, I mean, unfortunately, men are not very helpful. So we're like, well, we could go outside.
Danielle's over here going, truth.
Like we can go outside and we can play basketball or wrestle with the kids, but don't ask us to have patience to sit down there.
No,
And,
I'm living it every day. He's locked up in the office, and I work in the living room, and I have all these people coming every 5 minutes trying to talk to me. I had to kick them out because everybody wanted to look at what are you doing on the computer. Say, oh, there's people. They were saying hi to you guys. I'm like, y'all need to leave.
I'm the PE coach. That's about it. That's the limit of my usefulness.
Oh my God. Well, let's see what other questions Danielle, you have other questions? I'm trying to think of what health insurance. I get so used to just being on my robotic. I know I have a question. So one year I did the health savings plan.
Uh-huh.
And then the next year I was like, oh, I'm just not going to do it. I mean, but should I do it? I mean, I guess I should, huh? If I kind of look at how would I decide how much to do?
So if you're in I mean, probably the first thing is you have to make sure you're in a plan that is a health savings account eligible plan. And so I always tell people, because if you go to the IRS website, it says that it basically says if you have a qualified high deductible health plan. Well, all of us, if we just hear that term, think in our minds, well, my plan has a high deductible in my opinion, so I must have a high deductible health plan, but there's more to it than that. And so is a high deductible health plan by the IRS's definition, as you drill down into it, is a plan that does not have first dollar coverage for anything other than preventative care. And so that means that you can go for physicals, but everything else, whether it's a prescription because you're sick, or if you're going to see a doctor because you're sick, that it can't have a copay. Basically, you have to pay that cost in full towards your deductible when you have an HSA eligible plan. And so like I personally have a plan like that, but they also, the benefit, because you don't have those copays, is the premiums are less. And so like for my family, we tend to be pretty healthy other than, going in when kids get ear infections and stuff like that. But it's, maybe a few times a year, but the savings we have for a lower premium, we still have a major medical, but you can, for a family, when you're under the age of 55, like for this year, you can put anywhere from $0 to up to $7,100 into a health savings account. And what's great about a health savings account is that if you don't, so you basically allow yourself to self-insure towards your deductible over time. But then as you don't spend those dollars in that health savings account, you get a 100% tax write-off for this year. But then those dollars in the health savings account roll over 100% the next year. So
it could be a good thing then, right? Because I mean, I really need tax deductions. I mean, I probably should get back to doing it again.
Yeah, if you're on a plan, as long as you're on a plan that's eligible, you should put money into it, especially if you're saving money in other ways towards other things that are out there towards retirement. I mean, a health savings account is a lot like a 401k for medical.
And so I could just kind of add up past 1 or 2 years history of my total family, what we pay on co-pays and prescriptions and all that. And does it include dental too? I guess it depends.
It does. I mean, so that's the other benefit of a health savings account is it lets you to be able to pay for dental expenses and vision expenses as well out of a health savings account with non-tax dollars.
Oh, wow. Okay. And put that aside. And then it can roll into the next year. Okay. I'm probably going to do that this year then.
Yeah, it's like for my own family for 15 years, we've always had a health savings account except for 1 year. And the only reason it was the only year we didn't do it was my middle child was born on January the 2nd while we were in our own company open enrollment. And it's when she was born, she had a heart murmur and they're like, oh, she's going to have to go for a lot of visits. And I'm like, that 1 year I paid the extra money to have all the copays and everything was fine. But that's the only year in the last 15 years I didn't have a health savings account plan, and we used it that 1 year. But it was just a perfect storm, as it was just very convenient of when our own January 1st benefit changes happened as a company.
Okay, cool. Cool. I'm going to think about that. Awesome. Michelle, do we have on? I know we have Danielle on, and then.
Where do you save this money with you, or you save that health saving account with an investment company?
With an investment, and so a health savings account, the insurance companies themselves don't handle them. As you can do it through any major bank, but even like the investment firms, if it's have their own health savings account options that are available. Mm-hmm. But like the one that I personally use is an online bank that's called HSA Bank, simply enough, just because they specialize in HSA accounts. And so if you wanted to take part of your money and invest it into mutual funds, you can. And some of it, if you just leave it in the regular account, just as like a regular savings account type rate of return, you don't get a lot, but it's safe.
Okay. Thank you. I never heard about this before.
Awesome.
The other part, just as y'all are out there, I was gonna say one thing, just as y'all are out there around people right now and you hear people getting laid off. I'm sorry, was somebody talking?
No, it's just, let me.
Baby.
Okay.
Yeah, I've heard several people getting laid off. And so what's their option? Because I know Cobra is really expensive. Do they then just come and see you and you try and figure out how to manage that?
You can. So what happens is when somebody gets laid off is Cobra is always kind of that first checkpoint we have people look at is, okay, because depending on somebody's age, that if you're younger, yes, Cobra is typically going to be extremely expensive. If maybe you're older, or if you know somebody who's older who is getting laid off, then Cobra might be less expensive than the individual market. And so you first have Cobra that's available to you, but then after that, if somebody has some sort of health conditions and for some reason Cobra wasn't available, I just like people to be aware that on the individual marketplace that all pre-existing conditions are covered, but they're only HMO plans. And just if you aren't familiar with what HMO means, it usually just means that it's a smaller, more restrictive network. And so it just means that you might have more difficulty finding the right people you need to see for those health conditions. But then if you hear people getting laid off who maybe, or, like I just think of my own situation. If I were to get laid off and lose my job, that I still want to have everybody in my family is healthy, but I want to be able to have coverage for everybody, is there are short-term PPO plans available out there. They don't cover pre-existing conditions, but they can also be fairly inexpensive. They're going to be much less expensive than even the individual marketplace plans. But just these short-term plans don't cover pre-existing conditions.
So that's like the 6-month window, like you lose your job at ABC and that, the economy just has to get started again. You're going to have a job in, August, then you just kind of piecemeal that. Correct. In the middle.
Exactly. And then the other is if y'all, like in our own company and Benefit Concepts, we're a very large insurance broker. Like we have a whole Medicare department that if you know of anybody who loses their job and they're age 65 or older and they've been paying into Medicare during their working life, that they're going to be eligible for Medicare, and is where they should, if they lose their current group insurance coverages, we strongly recommend people go enroll into Medicare immediately if something happens to where they lose their coverage.
Oh, wow. Okay. So that's an option. instead of Cobra. But doesn't it take a little while to kick in?
It can, but I mean, we're talking about like a couple of weeks. So if you lost your coverage today, you might need to elect Cobra for this month, but you could get Medicare going by June the 1st.
Okay.
Lose your coverage with your job, doesn't it keep for the whole, like say you pay May 1st for insurance, it would last till the 31st, right?
Not always. It depends on the company you work for. Now, like the plans that I handle, the majority of the time, yes, that's the case. But we're certainly seeing it with a lot of, especially larger employers, you know, the energy companies right now, that they basically have plans that your last day of work is your last day of coverage. And if you're not getting some sort of severance package, that's it that day.
Oh, that's hardcore.
That is.
I have a question.
Hi, Dory.
Hi, everyone. How is everyone?
Good, good.
I'll just throw in a little bit from everyone's conversation. And maybe, I don't know if it's helpful or not, Jen, but I have used the service that you were speaking about, Shawn, and it was like one of those, well, should I call them? I don't know what to do. And and then ultimately I looked on my phone, it's Teledoc. And it was, I didn't get charged. The nurse who answered the phone said, we'll have someone call you back. It's literally like this. The doctor is calling you, going, okay. I mean, I had something it was a minor thing, like maybe an allergy or sore throat or something like that, or I didn't know what to do. I don't remember what it was for, but I've called 2 times. It is awesome. And from what I understand, I've the 2 different insurance companies. The one I have now is Teledoc. So it was great. I also, because I was at the doctor yesterday, and you might want to check this out because it's really helpful too. I don't know if this is every insurance company, maybe Shawn would know. If there's a 24-hour nurse helpline, and they're pretty incredible too, because they, when I'm trying to reach my doctor, which is really impossible, I call the nurse helpline instead of just the office and leave a message and say, hey, I'm trying to get in for a visit. If I call the nurse helpline, she pulls up my chart, she puts the medication. I order the medication through her for reordering because it's way easier than calling the office and saying, okay, you guys didn't do a 3-month, you did a 1 month, now I need a refill. It's such a pain in the behind, but they just make it happen. I mean, the nurse line has helped me so many. That's, I guess, part of your benefit. It's a benefit. And then when you mentioned about your in-laws, I really don't know. I saw it on TV, and I was kind of like trying to figure out my insurance too, because I had Freddie Insurance a couple years ago. And so I saw something on TV about Legacy. So is Legacy a health insurance? I mean, a clinic where you can go and you just kind of pay, like Jen's could go there if something extreme happened and you'd have covered. You don't have to worry. They will take you. They don't turn you away. I don't know if they're just limited in what they can do though, but
they are. And
they are limited.
They are, that they're not going to, they're essentially kind of more like a doctor's office to a degree. And so, I mean, if you have something like diabetes or just other stuff where it's things that just need to kind of get maintained, is where they're there to meet those needs for. And they also, because they partner with another company that's called Central Care, and so they basically both work together just to kind of just provide that kind of primary care to a large segment of the Houston population, just where it just lets you to be able to get in, and where they're not going to, thing to ask you isn't going to be like most doctors' offices where they ask you, well, how do you plan on paying for today's appointment?
Yeah, because I referred someone there who didn't have insurance at all. When they told me about it, but I'd seen it on TV, and it was pretty much just people line up and wait to go in. It's maybe it's a necessary, but they aren't going to turn anyone away. And then I had a question. I don't know if this is something I'm asking kind of personally, but it's a little bit to do with insurance. And if you can't answer, that's fine, because I don't want to take everyone's time. I have a partner who is on Medicare, and he is disabled. He's on Social Security disability.
Okay.
So he receives a check monthly, right, for his disability, and that will continue on. He probably started, I don't know, 1.5 years ago. He has a very minimal part-time job, maybe 20 hours, whatever's within what he can work. And they also know he works for a company that does hire. a lot of people that have some disabilities. So they work them in as they can. So he did, because he's in the restaurant business, and he did get, if you will, I guess, furloughed or whatever you call it. He didn't get let go. Can you, with Social Security and having a part-time job, do you happen to know if you can file? Because he didn't, but can he? And I pretty much handle all his affairs. So it's more me being able to not get anyone on the phone, understand this complicated question. It's part this, it's Social Security, because I would never want to jeopardize his benefits because he does need them. However, I mean, it would be nice right now when, and they're saying, well, maybe you should come back to work. And he's like, I don't think I need to go in a restaurant. I'm not, can I collect maybe this 1 month, 2 months he's been sitting home when he was part-time help, and he gets Social Security. So that's just,
I mean, so as long as his part-time wages were truly being reported to the state, that he would be eligible then he'd be eligible for unemployment still.
Are they taking it out of those Social Security? Or are they taking part of, like, considering Social Security is not part of what they're considering?
Correct. It should typically no.
Okay, it's just
part-time work. That Social Security is just because if he qualified for Social Security disability, they just knew that he qualified for that because of the condition he has is limited, and how much work and probably the types of work he can do. And so they certainly don't penalize you for you trying to just not scrape by on just your Social Security benefits.
Yeah. Okay, I appreciate you answering that. It's weird one related.
Yeah, I would have him go out there online. I mean, just because you don't even have to do, with all this stuff going on, he doesn't even have to try to call anywhere. As he can go online to the Texas Workforce Commission website and apply for unemployment directly through the website.
Yeah. Got it. Thank you. It's information.
Cool. Thanks for popping on today.
Yeah, absolutely.
So it's 10 till. I just wanted to kind of start to wrap it up, to see if there's we've had a lot of good questions with a lot of broad topics. Really, God, Shawn, thank you so much for all your knowledge. And what's the best type of referral for you then? Let's just kind of sum it up, because you're so knowledgeable and I'd love to point people in your direction. Can you give us just kind of
the best type, it's really just the best type of referral for me is certainly a company who has employees who are interested in wanting to have some sort of health insurance plan. Because I would say that employers don't have to feel, a company doesn't have to feel like, hey, I don't want to do something because I don't want to contribute towards it. Now, that certainly always makes it more advantageous, because if an employee is not having to pay the full cost, then more people are going to be likely to take it. Anybody who has at least 2 employees or more are going to be an ideal customer for us. And we specialize in dealing with small businesses just to help them to explore the options out there.
And so really a small business, like a person that gets furloughed, or a person that loses their job and needs some type of insurance, and they're just a single person that needs to file for Medicare and stuff. That's not, can you help?
That's not, we can help them. Absolutely. They're just unfortunately for individuals, the options are just not as plentiful as you can on a group basis. So a lot of times we're helping individuals choose between 2 less desirable options.
Okay. Got it.
But we can still absolutely help them. And we will help them know those are the only 2 good options out there. Just sometimes when you're coming from that group plan environment from an employer and you go to that individual market, you're like, yeah, okay.
So small business owner that's a 1 or 2 man shop, or a 1 and a part-time person shop, 1 part-time kid.
Yep, that they can call that, just that person can become their own group insurance plan, and we do those all the time.
Okay, yeah, that's great to know. Any final questions? Shelm, I don't know if you have another question, or
No,
Danielle.
I got his cell phone number. If I've got a question, I'll just call him up.
That's right, you got the 911. Awesome. Well, Shawn, thank you so much for being with us today. I really appreciate it. And I love your background. Actually, Michelle, now, of course, I want to change my Learn with Jen and put some kind of phone number or website on there, but I love the way way I'm seeing his with his contact info. That's awesome. All right, sir. Well, listen, I guess if we don't have any final questions, we'll just pop off.
All right. Bye, everybody.
Right.
Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.